and make a presentation. Over to you, Mary.
Thank you so much. I'll try and be as brief as I can, and it doesn't feel nice being the person standing between people's lunch at this hour. So you can go to the next slide. So one of the things we do at the GSMA, beyond just representing the industry, we develop guidance notes and best practices, and also we gather insights that can help inform and grow the industry. And financial literacy is one of the things that we've been looking at to be able to help bridge the gap. So there's a lot of financial inclusion, but there's a lack of financial health, and also there's a bit where we're also trying to help inform or guide how we can actually help consumers become more financially literate and be able to help them grow just beyond just having access to the banking or mobile money services. In that respect, we'll start by just looking at what is the basic of financial literacy. So this is the ability to be able to make sound financial decision and be able to acquire the necessary knowledge and skills, confidence, and competence to use financial products and services. And it's also one of the way to make to be able to bring consumers, and also be able to bring consumers into a more knowledgeable financial inclusion ecosystem, and to also be able to help them take up more products just beyond, as I said, having a mobile money wallet or having a bank account. I'll go to the details of what is the current state of mobile money, or what is the current state based on mobile money. So according to the World Economic Forum, it is estimated that 70% of the new value that will be created in the economy in the next decade will be based on digital enabled businesses. In 2022, we had 319 mobile money services deployed in 102 countries. 106 billion of this were based on mobile money registered accounts, and 62% of the adults in sub-Saharan Africa actually have a mobile money account. The number of registered mobile money accounts has actually grown from 2021, where we had 104 billion mobile money registered accounts. So this is a growth of about 2 billion, 0.2. So this has contributed to a more inclusive digital economy, and there's also inclusion of previously excluded persons and the underserved groups. The growth in this financial access has also led to financial inclusion. In the results of this, we've also seen more regulators increase their focus on addressing financial literacy challenges through the development of financial literacy strategies and financial inclusion strategies. It's estimated that about 71% of the AFI members. So that's the background. Where are we currently? Infrastructure and access, as has been said by our previous speaker, has become a very crucial element to meeting the digital financial inclusion goals. Initiatives might also go further to be able to tackle the knowledge, confidence, and trust needed for individuals to use the technology and services at their disposal. According to the last State of the Industry report by the GSMA, lack of knowledge was actually cited as the second highest reason that is hindering users from registering for a mobile money account and actually even being able to use it. The World Bank estimates that 1/3 of the mobile money account holders in sub-Saharan Africa could actually not use their mobile money without the help from a family member or an agent. Women are actually more adversely affected, at 5% more likely than men to need help using their mobile money account. They state that 1 in 5 adults in the developing economy who receives a payment or receives any money ends up paying unexpected fees of the transaction. So these consumers, we find that are at a high risk of abuse. So where are we as a as a continent. So where are we currently in terms of mobile money? We have 116 live services. These are 166 mobile money services in Africa. We have 781 million registered mobile money accounts. However, 291 million of these are only active on a 30-day basis. In terms of mobile money agency, we have 6 million registered agents in West Africa. We have 2.4 million in East Africa. We have 931 in Central Africa and 10 million in Sub-Saharan Africa. However, despite the number of registered agents, you can see the number of active agents actually reduces. In West Africa, from the 6.4 million registered, we only have 2.1 active agents. In East Africa, the numbers as well as at 1.6 active agents, while in Central Africa, we have just slightly less than 500,000 agents compared to the 913 that have been registered. Next slide, please. So what is the current state of financial literacy in Africa? S&P Global, who does a global survey on financial literacy, say that Africa actually has the most illiterate adults. And the highest country with financially illiterate persons is Botswana at 52%, while the lowest is Somalia at 15%. Nigeria, Kenya, and South Africa are at 26, 38, and 42% respectively. That's the number of financially literate in this market. They also note that the topics that most adults do not understand, it's topics on interest rates, loan requirements, savings, budgeting, and loan risks. So what is the next step? As a GSMA and being an industry association, we decided to come up with a financial literacy toolkit that will help drive financial literacy and development of financial literacy, training and initiatives among critical stakeholders in the ecosystem. So what is this toolkit? Basically, it's a guideline document that has a set of resources and best practices on how to guide, and that guides on development of trainer trainings, manuals and initiatives. It also guides on development of end user trainings, collaboration of stakeholders, and how best to cooperate with industry needs on financial literacy for current and future consumers. As one of our previous speakers said, there's a lot, we all know we need to collaborate, but there's a question of how. And that is something that came up when we were doing our research during the development of this toolkit, where a lot of operators and a lot of the developmental agencies that we worked with in developing this were questioning, how do we collaborate? How do I get to the operator? Well, the operator is asking, how do I get to work with these agencies? So we felt there's a need to be able to guide how those engagements can happen. It also highlights the importance of financial literacy and awareness of mobile money. This is in correlation between financial literacy, mobile money usage, and income. We also developed a checklist for mobile money agents and consumers. So it's one thing to develop a training, but without a proper checklist to be able to see, are we meeting the needs of the consumer? Are we addressing the challenges of the consumer? Have we delivered? Have they had, as in, did the training actually deliver what they were expecting? So the checklist is actually meant for them to check on these aspects. I'll go to the next slide where we have now the approaches that we recommend in the literacy toolkit that can be used. We outlined some stakeholders, and we started with the digital financial service providers. This was followed by the mobile money agents, the government agency and development agencies, and then we have the regulators and governmental agency and policy makers. These are critical stakeholders in the ecosystem who we felt will have a very key role to play in delivering this financial literacy. And for the digital financial services, what we recommend for them is they need to start by providing training to their agents. So you provide a trainer of the trainer training. One of the things we noted during the research is that even the agents lack that financial literacy, and at times they're unable to even give proper support to the customers. We also highlighted who in that chain of agents should actually be considered and is as a must should be involved in the training process. For the rest of the stakeholders, that is the government agency, the agents themselves, the providers and developmental agencies, we actually recommend them supporting operators in providing end user training to consumers. And we note that despite just giving training, first critical element is you need to do an assessment of a need gap assessment for the consumers. However, there's some key element that need to be considered when you're designing this financial literacy training. One being language, the other one being gender, the third being disability, age, and the tools that you're going to use when you are designing this financial literacy training. And lastly, and key that has been missing in most of these initiatives is monitoring and evaluation. We have a lot of initiative, but who's monitoring to actually assess the impact? The third stakeholder in this would be the regulators and government agency and policy makers. As noted, most have developed national financial inclusion strategies. However, we note that there's a need for more collaboration. They need to involve operators to develop a digital financial service focused financial literacy training. They also need to implement policy measures and regulations that actually align to the needs and the gaps that are in the market. There's also the need to adapt a multifaceted strategy that support the development of digital financial education plans and program. As one of the speakers lightly said here, we need to start from the ground going up, from the small children going up. However, when it comes to the digital financial services, there's also a very big gap where there's also lack of the digital skills. And it's prudent to work with the operators to know what are the gaps that their customers are facing, or what are these challenges that their customers are facing, so that the literacy trainings that you're coming up addresses those challenges. So why is financial literacy important? This is my second last slide, and I'll go just through it. We see that financial literacy actually helps contribute to financial inclusion in that it helps drive informed uptake and usage of digital financial services. As I've shown you in the numbers before, we have 1.6 million registered accounts globally. However, only 586 million of these accounts are active on a 90-day basis, and 401 of them are active on a 30-day basis. That tells you there's still a gap. Yes, there's a lot of registration of mobile money account. However, is usage correlating to the number of people who have registered for the services? There's also the part where it will help build consumer confidence and trust. According to the consumer survey we did in 2022, we found that some of the main structural barriers to account registration include lack of trust. So it goes back to the fact that consumers still do not trust because they lack the understanding of what is this service and how is it helping me. The drive for digital financial products offering quality. So with financial literacy, and one of the things we are encouraging is embedding it in your services. We see that it's going to drive product quality, just going beyond offering a service of being able to transact it. Now that is adding an additional layer whereby consumers are able to, as we've been told, they're being encouraged to use their account, learn while doing. So that is one of also the aspect that we'll see financial literacy drives. So as a recommendation, and should be my final slide, then we can all go for lunch. We recommend that you develop and implement financial literacy program and initiatives that address financial literacy gaps in the market. So not just developing one-fit-all-sized literacy manuals or coming up with one-fit-all literacy training tools. Conducting a thorough market assessment by providers to inform the training focus areas. supporting financial service providers in developing financial literacy training manuals and content. There's also a need for collaboration in delivering financial literacy training. There's also the aspect of consulting and involving financial service provider during financial education policy formulation and development. And lastly, we recommend that you coordinate monitoring and evaluation of financial literacy initiatives and gaps for impact assessment and data sharing with all stakeholders. And that's the end of my presentation.
Can we put our hands together for her? It's been a case of managing time, moment, patience, as a case might be. And that's the beautiful thing I realize with my audience. They are very people who are much more interested in all of what we have to offer. And so, ladies and gentlemen, as a way of maximizing our time and ensuring that we also are able to move in as quickly as we can, I'm going to take the last track before lunch, which is going to be